exciting one, Carl. Thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Rates in the rally. A divided Fed speaks. The committee sizing up these markets no matter what happens a couple hours from now. Joining me for the hour today, Joe Terranova, Liz Thomas, Carrie Firestone, Jenny Harrington. Check the markets here as we wait for this afternoon's Fed decision. Of course, the news conference from the chair. NASDAQ's red. Everything else is green, but certainly there feels like it's a wait and see. Liz, nice to have you back. The 10-year yield, 4.20.
Yep.
Okay, that's the highest since September the 4th. Piper Sandler today says, is the 10-year at 4.25 the line in the sand for equities? So is that the biggest wild card today? What rates do on the back of whatever the Fed says?
Yes, but I'm going to add some nuance to that. So there's some technical resistance on the 10-year at 4.25, somewhere between 4.25 and 4.30. But the actual resistance for equities, in my opinion, is 4.50. So we still have some time until that happens in a durable way. But the nuance is, after every cut that we've had since September, yields have risen. We're actually only 9 basis points on the 10-year above where we were when they started cutting this September. Last September, when the Fed started cutting, yields rose from that September cut through the end of the year by 100 basis points. So the drama that we're sort of hearing about yields being up during this cutting cycle, I think, is a little overdone. And I think we are still pretty far from that scary threshold for equities. But the verbiage that they talk about into 2026, if it's very hawkish, I think that matters much more than anything about the rate decision today.
Yeah, you'll get an outlook today, of course, to Liz's point. Joe, what is the line in the sand then for equities? Where people assume that stocks are going to rally into the end of the year because of FOMO, chase for performance, Santa Claus rally, what have you. Is there a line? What's a number?
I think the most important thing is if we see the return of elevated bond market volatility. If you think back to 2022, the challenge in a very punishing environment where we were raising rates was you had a 10-year trading range that year of 285 basis points. So far in 2025, the 10-year trading range is only 95 basis points. If we are going to make a return in 2026 into an environment where you have elevated bond market volatility, that is going to be a problem. That's going to be a headwind. In the near term, I do think I've heard so much about the various types of disposition that the Federal Reserve is going to take today. Hawkish cut, Chairman Powell coming out, maybe not giving strong guidance because ultimately he doesn't possess the data. I think it's priced into the market. I really believe that. I think what's important.
Wait, hold on. You think hawkish cut is priced into the market?
I do. Okay. I think it's priced into the market. And I think the bulls should be excited at this moment. And let me share with you why. You have in front of you today the Fed announcement. You have the Oracle earnings announcement. You have Broadcom tomorrow. And then next week, you have the jobs report. For the better part of the last 10 trading days, we have been sitting in a very tight trading range after the pre-Thanksgiving rebound that was working off all of the short covering that we saw in the month of November. So we're sitting kind of at the top of the range. I think the market has its eyes on the 69.20, October 29th intraday high. And I will be, over the next several days, I won't be here. Kevin, I'm out. I'll be in front of the screen trading, and I'll be trading it from the long side because I think we're taking that high out.
Okay. Google or Alphabet and NVIDIA are the only two Mag 7 stocks that are outperforming the S&P this year.
Yes.
Surprising?
It is a little bit surprising. I think there is a dramatic bifurcation in terms of performance. They are dramatically outperforming their Mag 7 peers. So you're talking about somewhere around 10 to 15% when you look at names like Microsoft and Apple and Meta and Tesla. So it's clear that the marketplace has identified, quote unquote, the winner in the hyperscaler spending and the AI halo trade. Early in the year, it was absolutely NVIDIA. Maybe that's waned slightly to the benefit of Broadcom. More recently, without a question, it is about Alphabet. And let's remember, Apple's had a heck of a run off of that August low. It's up about 40%, and it really began the year struggling. So I think that's the playbook for 2026. I don't think you're going to see a universal move in either direction for the totality of these Mag 7.
Looks like, Liz, if you look at the equity client flows from, let's say, Bank of America, it's not as though money continues to pour into this area. Clients sold stocks, they say, across 9 of 11 sectors, led by discretionary, the biggest outflows since March of 2022. Financials, the 4th straight week of outflows. Energy had big outflows. Comm services saw inflows, but not technology as a broad group. 7th week of outflows, I think that just said, in the past 8.
So I think investors are, again, looking ahead to 2026. There are a few things at play here. And I'm going to go back to the beginning of the conversation about the yield curve. There are, I think, 2 different environments that we might see in 26, and it means different things for what sectors can outperform. Right now, consensus believes we're going to see an economic reacceleration, which generally is coupled with a steepening yield curve. That's what's been happening over the past couple months. If that continues into 2026, you tend to see value sectors do well. You tend to see tech still do okay, but value sectors really shine. So this rotation that we've seen in the market, I think, takes hold and continues on to 26. The risk is that the yield curve flattens, okay? If the yield curve flattens, then you've got defensives coming in, but the caveat here is that tech still does well. So my whole point to this is that you still have to own tech. And I'm not somebody that does single stocks, so I have to own it broadly. I think it still participates. This whole AI theme has to drive economic activity, productivity advancements, the optimism, but there will be, I believe, some really big winners that are newer to the conversation in 26 because of that environment.
Maybe discretionary is one that will have a better year. Discretionary is up 5%. Jefferies upgrades it today to a market weight. Sentiment's poor. They admit as much. We don't need to tell you. You know, I mean, look at what the sector's done. A lot of these stocks have been disappointments. That's been bifurcated. There's been real winners and real losers. Let's talk about Ulta. I have it on my list because the target got raised, Joe, to 675 from 615. It's a top pick at OPI. Yes. Today, the target also from Loop Capital to 600, I think.
So this company has done an absolutely phenomenal job in going out and marketing to the younger generation. And Gen Z is spending money on beauty and healthcare to the degree to which my generation never did at that age. They've done college tours around the United States. They've embraced the younger generation. The spending is there. It's real. It's an idiosyncratic story like TJX and Ross Store. I agree with your comment. It's so right now difficult to identify winners and losers in consumer discretionary. But when you find winners and you have a story like Ulta Beauty has,
like TJX,
that's why people are paying the premium for it, and Ross Stores.
How about that one? How about TJX record high?
It's TJX, it's Ross Store, it's Ulta, where we're seeing the opportunity right now, and there's a fundamental thesis behind it. It's off price, and then on the other side, it's capturing the younger generation as it relates to spending for beauty.
Ross record high, TJX record high, price targets going up on both. We're back. Calls of the day. We start today with Regeneron. Top pick for 2026, $800 is the price target at Wolf. Jenny, you own the stock.
We sure do. We've owned it for a long time. And it's interesting that this is their top pick because it really follows on what Joe was saying about what's outperforming today. It follows on what Liz was saying about value doing well into 2026. So here you've got a company that trades at 16.5 times earnings, has a 5% free cash flow yield. They've got 20% earnings growth. Shares are down 1% this year, and they have one of the biggest drug pipelines in the whole pharma biotech space. They have Dupixent, which continues to, that's the one that grows at 20%. Earnings weren't growing at 20%, but earnings have decent growth ahead. So you've got a reasonably cheap stock, great earnings growth, their main drug growing well, doing nothing. And I think, if these two are right, that's where the momentum goes into the next year.
All right.
So
speaking of top picks, Booking Holdings is called one at BTIG. $6,250 is the new price target. We see the makings, they say, of what should be a good year fundamentally. What do you think, Carrie?
Yeah, I like it. I think maybe 2 or 3 weeks ago, we talked about it because it was really down sharply. And I said, I thought that would recover because consumer spending is still strong enough to carry the travel industry. And you've seen the stock is up 14%. So we like it here.
All right, General Dynamics, top defense pick, $400. You get the theme. A lot of firms are making top picks in various sectors. Top defense pick is GD, General Dynamics. $400 is the target. Wolf, the firm. Joe T, the owner.
Has had a very nice rally from the April lows, and it's kind of been trading above its critical support of moving averages, pulling slightly back into the 100-day right now. So technically, if you look at that stuff, it's a great place to buy it. From a fundamental perspective, I think General Dynamics sets up really well when you look at U.S. defense spending, which has a priority on naval assets, in particular in the South China Sea, where we have literally a third of all global trade. So wanting a strong presence there, building up naval assets, that's exactly where General Dynamics can leverage the opportunity with the Department of Defense.
Okay. Fiserve is having its worst year ever. The stock is down 68% year to date. Mizuho says outperform. They reiterate that. They still love it. 110 is the target. Jenny owns the name. Make Fiserve great again, is what they say. Can you?
I think the price target's really interesting. The stock's at 66. So if they're right, it's almost a double from here. It gets it back to where it was before it took that huge hit a few weeks ago. And we think that they're probably at least directionally correct. Here's another one. 8 times. Okay, so in their note they said management is laser focused on getting it right and getting it back on track with growth. If they're right and they're back to double-digit earnings growth, you've got a stock that's got an 8 times earnings, an 11% free cash flow yield. It's a good company. They actually produce lots of revenues. They have Clover. So when you go check out, at a lot of small businesses, it's Clover that you use. That's a real product.
All right, so why is it down 68% year to date?
Oh, they had like this huge issue with like their sales to Argentina and going back, and they brought in a new management team a few months ago who came in, or maybe it was about a year ago actually, who came in and said like, hey, the Argentina business really has been the primary driver of growth. Everyone just kind of freaked out. So now there's a credibility problem. So you need to get credibility back. You need to get it back to this double-digit earnings growth, which I had for years. But that growth needs to be seen as more broad and not focused because of currency issues, what should I say, like drivers coming from Argentina for years. So there was like a real issue there.
Okay, well,
yeah, but they still
the
make
market likes to call.
Yeah.
You're looking at me like you want to say something.
No, I'm not being critical of your position. I'm actually questioning you as a shareholder. Do you feel as though management has done a good job in navigating the challenges? Because it's not just been one earnings report; it's been several earnings reports.
Well, obviously not. She's already said that it's a credibility problem.
Well, it's tough, and so this is the thing. So you have a relatively new management team, and they came in and were kind of like, whoa. Right, so it's a couple quarters where they're trying to figure it out. I think they kitchen sinked it this time to really say, let's clear the decks. So you definitely need 1 or 2 more to see what this team's doing and how they're going to get it back, and will they really be able to. We're in a weird spot with it where we've owned it for so long that we actually still have a slight gain on it, but we think it's really undervalued. That $110 price target, I'm not so sure. So we may take some off the table next year. I said when it traded down the first time and I was on, I said, look, we will use it as a tax loss, right? We might buy it back.
Well,
after the tax loss.
$110 would have looked good at the beginning of the year.
Oh yeah,
not
it
now.
did.
66 or whatever it was.
So it's a tricky one. So we have like some people with gains, some people with big losses. We have a tax loss that we could use. Do we need to use that this year? It's tricky.
It's a pretty bad streak, though, of 4 consecutive quarters where you see significant declines post-earnings.
That's why somebody says that it's a credibility issue.
Yeah. But it's not the same old management, right? It's a new one. So you got to give them a chance to get it back.
All right, let's get the headlines with Contessa Brewer. Hi, Contessa.
Hi there, Scott. Homeland Security has reportedly signed a deal to create a fleet of 6 Boeing 737s to use for deportation. The agency will spend nearly $140 million to fund that effort, according to the Washington Post. Now, that money reportedly comes from the massive budget increase in the One Big Beautiful Bill passed earlier this year by Congress, which added $170 billion for immigration enforcement. 12 Senate Democrats wrote a letter to the Secretary of the Navy expressing concerns about a review he's conducting into Senator Mark Kelly. They call the probe baseless and political. Defense Secretary Pete Hegseth ordered the review last month after Senator Kelly participated in a video urging military and intelligence officers to refuse illegal orders.
Of the comments yesterday,
Yes.
you have, without question, one of the most popular bank stocks, has one of its worst days in 8 months. And even the man who did the interview on the stage, the conversation that generated that comment, said just now he's surprised. What do you do with that as a shareholder?
Surprised as well. And I think it now comes down to JP Morgan's ability to increase revenue growth consistent with the expense growth, because otherwise you have negative operating leverage. If you don't, in 2026, deliver a 9% revenue growth, and by the way, the street doesn't expect they're going to deliver 9% revenue growth in 2026. They had a very good year, 12%. The year prior was 22%, so they've been delivering on that revenue growth. Expenses in the first 9 months of this year only grew 4%. So it is surprising, and I will be proven wrong in buying JP Morgan last week, where I did, up around this price level, if in fact they don't deliver on revenue growth. The other element of it is that what does it do for the industry itself? Does it now create an environment where it's almost like an arms race where everyone's spending? And again, that's a challenge for certainly the money center banks.
You know what it means is that pay attention in January when you get earnings, and
Yes.
now there's going to be even more anticipation for the other names in the group, not to mention JPM, to hear from Jamie directly, obviously, in the analyst community on what they deliver and what this issue ends up being. We'll pay attention to that.
Buy it on the close today, though. Personally, we know the fundamental good story about podcasts and pricing power, but the correlation with Netflix has now broken down. It's been having that correlation since back in June. It's a reason to go into the stock.
All right, see you on the bell.
Let's bring in our first panel now, which is Barry Knapp, the Director of Research at Ironsides Macro, and Tom Lee, FUNDSTRAT Global Advisors Managing Partner. Welcome to you both. Tom, you're more, I don't want to make it sound like you have a point of view other than you're expecting a more hawkish Fed, and Barry, you're expecting one that's a little bit more dovish. So Tom, you're more in line with consensus right now. What would that look like, and why are you still bullish on stock prices?
Well, I think precisely because our clients are expecting a hawkish cut. So exactly as Steve laid out, Fed does a cut, but future cuts are uncertain, not even maybe until June. Now, because that's the base case, then if that's what happens, of course, markets have already been bracing for that, and they've been bracing for it since October. And of course, there's a chance that it's a dovish cut, which would be bullish as well. And then I think
what to you would be a dovish cut? So, are there projections? Are there dots?
Yes.
There is. So we'll know right away if they come out and those projections show that they're expecting more rate cuts next year. Then you're saying we might only get one more in the summer.
That's right, and it could also be interpreted dovishly if they start acknowledging the balance of risks are shifting, so that then markets can realize the Fed is now acknowledging there's some underlying fragility of the economy. And of course, now QE is, because QT is ending, it's essentially not QT, which is QE. And there's, of course, the chance that there's something positive the Fed has to say. So I think it is a hawkish cut, but actually I think market reaction's positive.
And there's so much more you're queuing up here we're going to get into, but on a top level, why isn't it a bigger roadblock for markets, Tom? You could look at this and just say, well, we're already basically at all-time highs. Look at the Russells and so forth. And Powell's been known to not have a very favorable reaction to his commentary, and he's only got a few meetings left, so maybe he's even more hawkish than usual. I don't know. Why don't you think that's a bigger risk? And whether it's, I'm not just myopically even talking about this afternoon, but kind of setting the tone into year end and then into next year.
Yeah. I think part of it is just the market's now adjusted to the idea that the Fed is institutionally slightly hawkish. Now, part of it may be because that there could be undue pressure coming from outside the Fed, and the institution wants to protect its integrity, and that comes across as hawkish. But that dynamic is something the markets have been bracing for, and they've reacted negatively to it, like in October they did. And so I think because of that, that's what people are building into this December meeting. which is why it could be a surprise.
It's like when Apple always gives cautious guidance. The stock always sells off after earnings, and then it does fine again. And they also, of course, have the post-COVID period to react to, where you know that someone like Powell, who's about to leave, is going to want to say, I didn't reopen the door to inflation, right?
Yeah, that's right.
For that
Protect his
institutional
legacy.
Exactly. So, Barry, all of that said and done, there are still lots of people starting to talk about this quantitative easing issue. So it's a little bit confusing when you have, are we to view that even as economic policy making, or is that something completely different that just has to do with the plumbing of the financial system?
So for 3 years, you and I have been talking about the Fed eased primarily using their balance sheet, but tightened using only one of 3 channels that they have, which is they've just been draining reserves from the system. And so that's the plumbing issue, which is getting tight. But the much more important and impactful part of QE is when they're buying Treasury notes and mortgage-backed securities. That lowers long-term rates, which is what really influences equity prices and other risky assets. And they suppress volatility by buying mortgage-backed securities because of prepayment.
When do you expect them to come back into the market, the Treasury market?
Well, it is not lost on me, it shouldn't be lost on any investor, that the 10-year Treasury yield has moved from 3.99 on December 1st to 4.20 since the Fed began what I'm calling DT, duration tightening.
Oh, and no, now I'm confused.
Right,
Keep
well,
going.
now they're reinvesting their mortgage-backed securities pay downs into Treasury bills, not into Treasury notes.
Right.
So that means they're buying 17 fewer billion per month of we'll call them 5-year treasuries for simplicity's sake, and they're buying bills instead. And so that's putting upward pressure on longer term rates. This is when Kevin Warsh talks about shrinking the Fed's balance sheet to encourage private sector lending, he's skipped a step in there. The step is deregulating the banking sector, lowering the GSIB surcharge, widening the supplementary leverage ratio, doing all these things that could potentially expand bank balance sheets as much as $6 trillion from the 22 or 3 or so billion that they currently are.
That they should be the buyers.
They own the debt. This is crucial in the long run that a price-sensitive buyer owns the government debt, not a price-insensitive buyer. So when the government starts spending like drunken sailors, as they did in 2020 and 21, and drive spending to 30% of GDP, they're not able to just
keep going,
finance it, and keep going. And so this is a crucial transition that needs to happen this year.
But the reason,
yes, I'm a dovish on the Fed cutting the policy rate to try and steepen the yield curve so small banks can participate in this process.
That's what Paul McCulley talked about. A lot of people are saying they should cut because they want to renormalize the yield curve.
That's right. So their policy rate has been overly restrictive for floating rate borrowers, small businesses, Russell 2000 companies. You know, Tom and I have tried to get bullish on the Russell 2000 for the last couple of years. This is part of the reason why it hasn't worked. But policy's been accommodative for long-term fixed rate borrowers, investment grade companies, relative to high yield companies, for example. So for me, it's crucial that they allow that duration to return to the wild, go back into the market, reinvest in bills, but lower that short-term rate. And
but just to put a point on that, so I can follow you when you say, look, the rate is too high, it can come down a little bit, fine. But then they also need to restart QE. Okay, I guess they do.
They're not going to restart QE. If I'm right about deregulating the banking sector,
they're going to restart
it'll be totally unnecessary.
They're going to restart QE. They're already basically admitting to that.
Well, Powell's not going to be chairman anymore. And integral into what Bessent is asking the next Fed chair to do is deregulate the banking sector. If the banking sector doesn't need to hold $3 trillion of reserves because the requirements don't
then they don't
force
need to
them
worry
to,
about the balance
then
sheet.
we're not going to have tight repo rates. So that's how we avoid the Fed expanding their balance sheet and interfering with the price of the most important security in global markets, the 10-year Treasury.
Absolutely, but Tom, the reason why we fixate on this, which sounds wonky, but it's not, especially if you're in the crypto world, for instance, where you hear people saying QE is coming, the liquidity is coming, buy Bitcoin or buy whatever crypto asset or buy stocks because this is coming. So it's important to know whether it's coming or not.
Comes from the banks, though.
Yeah,
fair.
But yeah, in the crypto world, QT was draining liquidity. So the ending of QT is essentially QE, because if they're just holding the balance sheet flat, they are still going to be essentially adding liquidity to the system.
Just to maintain the size.
Yes, and so that is why I think crypto prices have risen in anticipation of this meeting.
So do crypto prices keep going? Do you have a bullish view still on small caps if we're finally going to get that rate coming down a little bit? Where should people look for alpha or outperformance?
Yeah, I mean, like 2026 is a year like there's a new Fed, right? But a dovish tilt. And at a time when the ISM's been below 50 for a record more than 3 years. So that's really good for small caps. And as Barry says, if they deregulate banking, and we were talking about this offline, that's really good for small caps. But that's also really good for the business cycle. And we've talked about this in some of our past research. Crypto prices are really sensitive to the ISM. So the ISM moving back above 50 has historically been associated with actually super cycle moves in Bitcoin and Ethereum.
Wait, ISM going into expansion territory is positive for Bitcoin? And
correct.
For all, interesting.
Yeah, and so if you look at ISM and Bitcoin, and you detrend Bitcoin, essentially look at its distance from the 200-day, it's almost perfectly correlated to the ISM.
Surprising.
And same thing with copper to gold prices. So copper's an industrial metal versus gold is a monetary.
Right, but all of that tells you that it's basically just risk on, that they're all behaving like an economy. And am I overcharacterizing
Yeah, I think that's right. I think Bitcoin's a bit of a chameleon because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both are about to turn up. So that would mean anybody who thinks the Bitcoin 4-year cycle means crypto prices are down next year. We're betting against that, thinking that new highs come early, like in January.
As a final word, we're about to talk to Jason Furman, Barry, who says the Fed should not be cutting because of inflation. And I'm just curious what your response would be to that.
That the rate did not trigger the 2021-22 inflation. The Fed cut the policy rate from 1.5 to 0, but then they bought in 21. They bought $1.5 trillion of securities, which injected that amount of reserves into the system. At the same time that Janet Yellen drew down the Treasury General account, didn't issue, and injected another $1.6 trillion in reserves. That government spending and Fed purchases of assets, which facilitated the government spending, is what drove house prices up 46% in 18 months and drove goods prices from -1 to 12.5. So I would much prefer the Fed controlling inflation by expanding the term premium for longer term debt, trying to cool off this excessive speculation that people like Beth Hammack are worried about, steepening
in the AI
yield
space,
curve, right? And steepening the yield curve so that small banks can start lending to small real estate developers and small businesses, and we can stabilize the part of the economy that's really weak.
So again, you think they can lower rates and still lean against the AI bubble?
For sure, because the thing that determines stock prices over time, we create an equity risk premium. We use the 10-year TIPS yield, the real yield from the 10-year part of the curve, not the policy rate, right? So this liquidity versus longer-term rates is a crucial distinction. And I would argue to Jason, if they really want to control inflation, the thing is making this process, privatizing the Fed's balance sheet so that price-sensitive buyers own the debt and the government can't go wild.
Barry wants long-term rates to go higher. You're never going to get
They're not going, I want to be clear, they're not going far higher because Bessent does have some tools underway. The deregulation of the banking sector, he could eliminate the 20-year. There's other things he's going to do.
Yeah.
But I do think, a 440 to 450 move or so in 10s early in the year and a much steeper yield curve is probable.
And that would be the right formula. There'll be a quiz after the break if everyone's been following along. But I like the nuance here because there's much more to it than simply what they do with short and long.
The balance sheet is just so crucial, and it was so crucial to what happened in 21.
Yeah.
And it's so crucial to the outlook going forward. The Fed owns $6.25 trillion of securities. The committee at the last meeting in the minutes said they think that portfolio should have roughly the same duration as Treasuries outstanding.
Yeah.
That would imply they should own $2 trillion of bills, not $200 billion.
We don't even need stable coins. We're solving all these problems at once. Gentlemen, thanks. Really appreciate it. And of course, we'll find out in 45 minutes what they decide. Barry Knapp and Tom Lee. Thanks for coming on set.
The world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth. We had better labor market. And this is really due to the American economy. We have an extraordinary economy. And, people are innovative. They work hard. And so, we're all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
Breaking news, Fed Chair Jay Powell following the committee's decision to cut interest rates by 25 basis points while signaling a higher bar for the next cut, what you might call the hawkish cut most were expecting today. Chair Powell saying the Fed is, quote, well positioned to wait to see how the economy evolves. Maybe, though, the biggest news of all today regarding the balance sheet. The Fed will buy short-term treasuries sooner than we thought as well. The chair says to manage reserves, you can call it QE light, call it whatever you want. Stocks jumping on that news. You take a look at the Dow, up more than 1% right now. In fact, the S&P may, in fact, set a new closing high today. We had 3 dissents for the first time since 2019. It does point to the divided Fed that we've all been talking about. Welcome to Closing Bell. All right, Seema, it's going to be exciting. We'll see what happens. Michael, I'll turn back to you. The importance of this one is what?
It's pretty significant. I mean, we haven't, for all the good things that the market is embracing right now about the macro and how maybe these cyclical parts of the market can work, we haven't called off this really pitched debate about whether we can and should finance the AI infrastructure boom the way we are right now. It's remarkable how Oracle has become the concentrated touch point for all of these arguments, pro and con. So it is quite fascinating. I think the overall credit markets have done fine, right? They have not really been unsettled by even some of the ripples in data center-backed debt. So I think that's a positive. It's much more about how fast can we go, how much confidence do we have about the demand continuing there, and if OpenAI's got $1.4 trillion in commitments it's already signed up for, how much capital is it going to consume at what ultimate cost? Meanwhile, the world wants to talk about data centers in space now, right? So it's kind of like, it just seems way too open-ended with a wide range of potential outcomes to gain too much comfort in the short term.
Mike, we've been talking a lot about a so-called everything rally, whether we would actually be able to get one between now and the end of the year. There were some signs, then some not. Now I wonder that we get the Fed out of the way. We didn't get to your thinking anywhere close to the hawkish cut that the market was clenched up for. Does this now clear the path for that?
It's hard to see an identifiable obstacle to the market having that kind of a lift. Now, it doesn't mean it's going to be, again, the broadest and the most aggressive and highest momentum, because the market hasn't really indicated that it wants to really hightail it to the upside in a broad way. But, today could be the start of something like that, and at least you have to give credit to what the tendencies are, which is strong years tend to finish strong, all the things we know. I know everyone wants to talk about how when the Fed cuts rates and the market's within 2% of an all-time high, it's always been higher a year later. That's very true. But it was 2.17% off an all-time high in October of 2007. So if you widen out the scales, sometimes it doesn't seem as much like a sure thing. But right now, I think the market's giving you the message you probably wanted to pull after this Fed decision.
All right, good stuff as always, Mike.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Wednesday, December 10th, 2025. What a day today in the markets. Not a great day for me. I was at the dentist office, root canal, complications. Tomorrow I have to see a specialist. Pretty much nightmarish for me, but it was a great day for the markets. And as you can see, the Dow up 1.05%, NASDAQ up 0.33%. The S&P 500 up 0.67%. Russell 2000 was up 1.36%. We saw Tom Lee. We saw some clips from the halftime report. Just a few clips from different shows on CNBC. And what we're going to do in this video is we're going to cover a number of the stocks that they talked about. Okay, so that's part of the segment that we're going to get into here. We're going to look at the technicals. We're going to look at the S&P 500, the NASDAQ, the QQQ, Dow, Russell 2000, the VIX, the Euro stocks. We're going to look at some of the stocks, like I said, around 11 stocks that they discussed, and I've actually highlighted some of the strongest ones to consider from a technical perspective. We're going to be using the Ichimoku indicator, okay? We're going to talk about Tesla, Apple, Meta, Microsoft, Amazon. What sectors should we be looking at? I've highlighted some of the strongest ones. And I also have 3 stocks from our members that I'm going to be basically showing you guys in a few moments. All right, but before we do that, let's take a quick look at the markets again. We're going to look at the heat map, and what I want to do is look at the individual stocks here. How did they perform in the S&P 500 today. Microsoft was actually down 2.74%. You see Netflix was down 4.16%, T-Mobile was down 3%, Apple 11 was down, Walmart, Costco, okay. But the majority, even and Uber was down 5.51%, but the majority of the stocks were up. Like Palantir was up 3.34%. Broadcom was up. A lot of the semiconductors, except for Nvidia, which was down slightly. Google was up 0.99%. The healthcare stocks rebounded, which is great. Energy stocks did really well today. Basic materials and the financials rebounded as well. So, like, it was a nice overall day in the markets today. So, let's look at the groups, actually, so we can see the individual sectors here. Industrials took the lead. All right, we have industrials up 2.05%, followed by basic materials, healthcare, consumer cyclical, and financials. And utilities, the laggard, down 0.16%. Here's the 1 week performance: technology in the lead and utilities at the bottom. All right, so utilities have been really not performing that well. But it was nice to see healthcare today rebound up 1.35%. Anyway, let's get into these. We're going to start off with the S&P 500, and then we'll get into the rest of these. I'm not going to spend too much time. As you know, I kind of like to run through these very quickly. We use the Ichimoku indicator. What we're essentially looking for here, folks, for those of you who are new, is for price. Okay, we want price to be above these little Japanese candlesticks. They need to be above the Tenkan-sen, the 9 period, which is the midpoint of the last 9 periods. We need it to be above the 26 period, which is called the Kijun-sen. That's the midpoint, not the closing price, but the midpoint of the last 26 periods. That's why it flattens out sometimes, like you see right there. It's not like a traditional moving average. We want that green line above the red line. Then you got the Chikou span back here. That's the laggard, line. That's the closing price today, projected 26 periods into the past. In this case, if we're looking at a weekly chart like we are, that's going to be 26 weeks ago. And we want that white line to be above the candle 26 weeks ago. We don't want it to be under like it was back here. And you can see how that led to that decline right there. And then the last part of this indicator is the Ichimoku cloud, which is comprised of 2 lines. The Senkou span A, that light colored blue line that you see right there. It's comprised by taking the 2 moving averages here, the midpoint of those 2 moving averages, and projecting it 26 periods into the future. So it's constantly plotting day after day, week after week. And then you get the Senkou span B, which is the midpoint of the last 52 periods. Instead of it projecting under the candle like the 9 and the 26, it actually projects into the future. Okay, like the Steve Miller song. 26 periods into the future. So that's kind of cool. I like that. All right, now I'm also using the directional movement index down below here. That's another indicator, and I'll explain that as we get into the analysis in a few moments. But let's go ahead. So as I mentioned before, the S&P 500 is still in a very strong uptrend. Here it is on the daily chart. A couple of things I should mention, a couple of resistance levels here. We get the 689.70, which we have not broken through quite yet. All right, we still have to get through that level, but overall, it's looking more than likely to happen tomorrow. The ADX, now, the ADX, this white line that you see right here, that's the ADX. I've got it at a setting of 9. It's a little faster than the traditional setting. If that's moving up, that means that the momentum is increasing. And when the green line is moving up and the red line is moving down and the green line is above the red line, unlike back here, that's very bullish. So I think we're going to see a breakout tomorrow above the 689.70. The momentum is on our side. The cloud itself is turning bullish. That's when you've got the Senkou span A above the Senkou span B. Back here you can see it had crossed under temporarily while we were in this little consolidation stage. What about the Qs? Also looking pretty good. Needs to break through that 637.01. How far are we from that level? We're about 1.3% away. Okay, you can see the ADX is starting to edge up a little bit right there. Dow Jones, okay, we've got that 484.39 level that we need to break. That's the all-time high for the DIA ETF. And how far are we from there? We're just 0.6% away. Once we break through that, we're going to be hitting all-time highs here for this ETF, and it's going to probably continue to the upside. Russell 2000, Guess what? Now this is exactly what we're looking for. Now, when I see the small cap stocks like in the Russell 2000 start to, they basically can give us a little bit of a heads up. And I've said this before. This is a indicator in itself. When you see this breaking up above high resistance levels, and for the first time we've got the Russell 2000 hitting these levels, folks. It's never been above 252.77. All right, and that level goes all the way back to this point right here back in October. You can see how it was back here on what day was that? That was on December 4th. Okay, December 5th, December 6th, December 7th. All 4 of those days, it just kept on staying under that level. And now all of a sudden, what do we have? We've got a breakout. Very important. What else do we have? We've got a couple of other things. The volume here broke through that 50-day moving average. That's significant. Okay. What else? We get the ADX moving up. We've got the green line moving up. We've got the red line moving down. This is all confirming. And by the way, and also the future cloud is also bullish, right? I do sometimes need to make sure to zoom out so you can see that right there, because it does project so far into the future. So I like what I'm seeing here with the Russell. Very positive. FEZ, the Euro stocks, guys, it's about to break. It's about to break. It's right on the tip of the line right there. The 64.36. If it breaks through that level, it does still need to break that 66 to hit an all-time high. This is actually a monthly level, that $66 level that you see right there. If I switch it to a monthly chart, we'd have to go back in time, all the way back to 2007, I believe it was, right around that time. Yeah, December 31st of 2007. So once we break that, Euro stocks are going to do well. Okay, in my opinion, we're going to see a breakout. That's what we need. I'm a breakout trader. I'm looking for momentum. I'm looking for levels to be broken, because what does that tell us? It tells us that there's more interest, and people are going to, there's going to be that fear of missing out, situation that's going to be taking place. I think a lot more people are going to be more confident, especially after, the Fed coming out today, and it was pretty positive overall. The VIX also dropped as a result. That's the volatility in the markets. Remember I mentioned that it stalled right at the Tengensen yesterday. It dropped. So that's a good sign. Down 6.85%. Let's take a look at the stocks they talked about on the show. And ETFs. Like IWD, for example. I've got these 3 highlighted because they look great on both the weekly chart, right there, and on the daily, from a technical perspective, using the Ichimoku rules. So I like IWD. This is the iShares Russell 1000 Value Index Fund, up 1.37%. Very nice. ROST. This is one of the stocks that actually came up on the Blue Cloud scanner today. That's right. The Blue Cloud scanner showed up a number of stocks, and I shared that with members. ROST, Ross Stores. If you guys want to get access to the member-only stuff, folks, all you need to do is the following. Go to my Blue Cloud Trading page here. All right. Give me a second. What you want to do is click on that right there. Boom. There we go. Okay. From here, you can see there's a join button. All right. And once you click that join button, it's right next to the subscribe button. You click on that. This pops up. Blue Cloud supporter. All right. You'll be supporting the channel, and I appreciate you guys. Under Blue Cloud Trader level membership, you get the exclusive member-only videos. All right, those are great, and I do those once a week. Every weekend, I go over my entire portfolio, all the trades that I placed throughout the week. But if you want to go one step further, you become a Blue Cloud Legend level member, and now all of a sudden, you get access to the daily trades that I'm placing, and I post those. You'll have access to some recorded day trading videos. You can request 3 stocks or ETFs to be analyzed each month. You'll also get that access to the exclusive member-only videos. Once you've become a Blue Cloud Legend level member, there'll be a new tab that pops up right next to posts over here. It will look like this, membership. You click on that, and that's where you'll find those. In fact, if you click on posts, you'll be able to see some samples of what that looks like. Okay? All right, let's get back to what we're talking about. So we're talking about, and one more thing before we get back. If you click on this segment right here, 9 more links, click on that. You can read a little bit about my channel. Scroll down. There's a whole number of links, including a $25 coupon for the TC2000 software. You click on that link right there. If you want to get access to my Twitter page, right there. A lot of different links. Check them all out, folks. If you're a landlord, property manager, this is a great free property management software. It's called inago.com. This is the website. 3 free months for NordVPN. Okay, all that good stuff right there. And wise.com if you plan on, transferring money overseas. Okay, let's get back. Here we are, ROST. So it looks great. I like this one because it also broke through this little consolidation area here. Boom. High volume. Looks very good to me. ULTA looks great. Even though it was down 0.38%, if you look at the weekly chart here, we're still above this 572.21 level that we broke. It's based on this high right here. Came down to it today. This week. Right there on Monday, December 8th. And then it's just kind of like building a little bit of a base, is what I call it. Almost like a pennant pattern, actually, if you think about it right there. Yeah, that's more of a pennant pattern. And that's bullish if price has been moving up, and then you see one of these types of patterns. Let me show you guys what that looks like on a cheat sheet here that I have in my X page. So this is the x.com at Blue Cloud Trader. All right, what you want to do is go next to posts and replies, hit highlights right there, scroll down, and you'll find that right there. Do you see that? The pennant, the continuation, bullish variant. So again, it looks exactly like what I just drew for you guys right there. Okay, and that if price now breaks above that level, expect it to continue. If this is the bearish variant, if it was declining and you saw that exact same little pennant, it's more likely to be bearish. Okay, you can get this for free down on the Twitter page. And then this is the cheat sheet for the different Japanese candlestick patterns. You can learn how to understand candles right here and some of the popular single candle patterns that are bearish versus bullish. All right, check those out. I'll be discussing those in a few moments too. APO, Apollo Asset Management, looks great. Look at this on the daily chart, breaking through here, looking very bullish. This is what we want. We do not want to be, now the idea behind Ichimoku is, Ichimoku stands for at a glance. You should easily, clearly be able to see whether or not it's looking bullish or bearish when it's under the cloud, okay? Or under the moving averages. You can see how long it can stay that way. Once it starts emerging, that's when you know that things are starting to pick up. There's more interest. Look at the ADX moving up there, the green line moving up, the volume starting to increase. What does that tell us? More buyers are stepping in now all of a sudden. Why hold a position that's declining for an extended period of time when you can be getting in at the optimal time and then hopefully ride that nice move to the upside? All right, so APO looks good in the daily. It looks good in the weekly. Look at the weekly too. Breaking through the cloud. The only problem with APO, though, is that the cloud itself hasn't turned bullish, but I do like where it's going because the Chico span did break above the candles here. It's just, this is all happening this week, up 3.61%, and on the daily chart, it looks good. Okay. BMNR is under the cloud. I would not be jumping into this one. This is the Bitmine Immersion Technologies. Yes, it is showing some strength recently. Yes, we do have, in fact, a bullish crossover. Tenkan-sen above the Kijun-sen, and the ADX is looking good, but it's still in this decline, and Chico span is still underpriced. You know, it could be a short-term or short-lived little move up here, and then it could, once it reaches the cloud, potentially drop. So just give me a heads up about that. On the weekly chart, we're also under the Tenkan-sen still. FISV is under the cloud on the weekly. Look at this decline here. Yikes. Fiserve, folks, do not jump into this one. I don't, it can stay down here for a long time. In fact, look at it. It has been under the cloud here for an excessive period of time and under the moving averages back here. It goes all the way back to like literally March 4th, 2025. It's down 70.07%. Not something I would be even considering at this point. There's no indication that there's all this money coming into this and people are starting to buy it up and that it looks like it's going to potentially move up. There's none of that. GD, General Dynamics had a nice day today. Bullish engulfing pattern right there. Came into the cloud, but it's still inside the cloud. So no at this time, but it could change. I could change my mind soon. GRNY, FUNDSTRATs, granny shots. Also, we have a bullish crossover here. It's still in the cloud. It's more than likely to break through this week, but I wouldn't jump in until it does, basically. REGN looks pretty good here, except for the fact that it's still under the Tenkan-sen on the daily chart. What does the weekly look like? Inside the cloud and under the 200. If you're not getting a double confirmation from the weekly and the daily, the chances that your daily is going to be successful is reduced. The probability that you're going to have a very bullish scenario in a stock just gets reduced. So that's why I typically review both the weekly and the daily before making a decision. I want to get the long-term outlook as well as the shorter time frame, like the daily. And I look, of course, at the fundamentals too. That's important. One of the cool things about this software here is that I can, in fact, add these fundamentals at the very top of my chart. I can add whatever type of fundamentals I want. If I right-click here, for example, hit the Edit toolbar, you can see here I can add a row if I want to. Click the plus button. Here are all the different fundamental things that I could add if I wanted to. Of course, it takes up a lot of real estate on your chart, so you have to decide what's important to you, But what's cool is that you can customize this TC2000, and you can get a $25 coupon with the affiliated link in the description and in the links section. All right. Anyway. All right. So what else? Let's go to Spotify. This one has been declining. It reemerged back above the cloud. That's a good sign. Bullish engulfing pattern. It's still under the moving averages, though, so not the time to be adding here. There are some stocks and ETFs that I didn't discuss. Some of them are in the members-only portfolio. Members get to view those when I do analyze those. All right, then we got Tesla, folks. Tesla, which is also still looking pretty good. It's still above the moving averages in the cloud, in the daily, the weekly, and the daily chart. The only problem is it still has not taken out this high here, and it's still under this trend line, this long extended trend line. In fact, I should probably revise that based on that high right there. So it is still under. So not something I would be interested in personally. Apple, shooting star. We had that last week, but it looks like it's holding up above that low. That's important. Here's the daily chart. It's stalling right here at that 277.32 level. It's in between the two moving averages. If it can get back above here this week, Apple should continue its rise. Meta, on the other hand, not looking particularly great here. Okay, you can see that we have had a lower high here from this one, another lower high. Here's another one. Okay, again, it's like a stair-stepping process, and it's just not something that's, of interest right now to the majority of traders out there. And so do you want to be holding the bag on this one for a long extended period of time? That's your choice. Microsoft also declining still. Finding support at the 200 back here. Might find some more support here soon, but it's not the time for me personally to get in. Amazon is also under the cloud. I'd stay out of that one for now. Okay, what about the sectors now? And we're going to just look at the strongest ones. There's a lot more. I've added some more. I've reviewed all of them prior to doing this video. Biotech reestablishes itself back above the 9 period. It was starting to look a little gloomy here the day before the Fed announcement here. It got closed under the Tenkan-sen. It was the biotechs were starting to look a little bit potentially bearish here, and now it reestablished itself with what's called a bullish harami pattern. All right. And the bullish harami is a double candle pattern. It's this one right here. Okay. Let's get back. All right. So I think XBI is going to probably continue moving up now at this point based on what I just saw. Energy also looking pretty good. Okay. Looking good on the daily and on the weekly chart. We got financials looking good on the weekly, but it does need to get above that 54.49. There's the daily chart looking pretty bullish future cloud. We've got the industrials, XLI, needs to break through that 156.99, but it's looking very bullish again, daily chart and weekly. XLK looking pretty good. 3 weeks in a row here, moving up. Daily chart looking bullish as well. GDXJ is looking good. Okay. Junior gold miners ETFs. They were pulling back for a little bit. Now they're starting to recover. What about copper? COPX looking good. I mentioned this yesterday, by the way. Just check out my video from yesterday. I said, guys, this is most likely going to bounce here. It's looking more bullish because what I love to see is price, for example, and because it gives you a second opportunity to get into something. It's like price comes up to a specific level, right? That's 66.20, which is why I drew that level, okay? Price drops. Okay, so now we know that this is a significant, a significant level that needs to be broken in the future. All right, so now price dropped, continued dropping. It came back up here. And what had happened? It stalled actually, right? Stalled on that candle, on that candle right there, and dropped a little bit more. But then right after that candle, it actually gapped right above that 66.20. That's always a very bullish sign when price gaps right above a resistance level. So, and then what happened? Price moved up a little bit, pulled back, and what did it do? It found support at 66.20, created a hammer. I said there's a higher probability that this thing is going to start moving up 2.33%. Looks good on the daily, looks good on the weekly chart. I like it. So there's the shooting star on the weekly too that it broke through. That's a significant thing. All right, and it's all-time highs now for copper. XLY looks good, consumer discretionary. I like this one. I like silver, SLV. Look at silver taking off. I talked about this one yesterday. I said, guys, this looks great. It broke through this little consolidation area. Expect it to rise some more. It is. XLC found a little support right there at the Tenkan, is bouncing. It did not break the 117.24, this prior high, but it's building a base. I think it's more likely to move up tomorrow, next day. ADX is moving up. Everything looks good. GLD is looking great. Here we are. Yesterday we got above the Tenkan. We were above the Tenkan the whole time, but now there's just a little bit more strength behind this move, just a little bit more, and so the volume is increasing. Price is hitting a higher high now from the prior candle. It's above that prior high, so that's important. SMH, look at this, breaking through the 372.78 level from this prior high. This is a good sign for semiconductors. Very good sign for semiconductors. I was concerned that worst case scenario today, if the news were negative and Wall Street did not take the news well, that we were going to form a double top pattern, okay, which is double tops are very bearish. All right, very bearish patterns. And actually, you can find out about that one. Let's close this out right here. Double top. Where is it? Double top. There it is. So there's the double top. Price moves up, drops. Price moves up again, does not break through the prior high, and then declines. That's a bad sign. Bearish. However, due to what occurred today, we have in fact broken that high. It's this special candle that changes the whole outlook now. Even if price now pulls back, hypothetically, tomorrow, the next day, I'm feeling a lot more confident about SMH because it broke that high. Okay? It's a technical level. The ADX is moving up. The volume is increasing here. Even if it's not increasing by a lot, it's still increasing. We have higher volume here today than we did yesterday. All right, now the rest of these, a lot of them are positive, but they're not sound yet. That's why they don't have a blue flag next to them. I mean, I'll just kind of skip through them so you can see. Oil K, for example, still under the cloud. Real estate is under the cloud. XHB Home Builders is entering the cloud. Utilities, look at that, not looking pretty. XLV bouncing right here. So healthcare is starting to show today was a really important day for healthcare. Yesterday was looking very bearish. Never like to see price breaking and closing under the Kijins, and now all of a sudden things are looking a lot more rosy. Volume is starting to increase. I think that's the end of this little pullback, and I think we're going to see healthcare continue. That's just my intuition here. XLP inside the cloud. All right. Bitcoin. IBIT in between the two moving averages. XLB. And by the way, why do I like XLV so much? And I'd like to see it get above that Tengensen. Is because the weekly chart is still very bullish. Look where it stalled. It created a hammer right on the 9 period, the midpoint. The cloud itself is still bullish on the weekly. I think it just needed a little break. It was going up sky high. You know, it was just moving up very too quickly. XLP, no on that one. Here's the weekly chart under the cloud. Bitcoin is still inside the cloud on the weekly chart. And on the daily chart, it's still stalling at the Kijinsen. So, you know, Bitcoin's not the right place to be currently, in my opinion. I mean, this could be the potential move back up, but you're still under that 200-day. You know, you got some negativity there. XLB is stalling inside the cloud, but it has potential here too. The materials, XLB, right? Now, I do a much more in-depth analysis looking at a much larger group of stocks within the materials sector. I can tell you it looks a lot more bullish in my analysis. This is just looking at one ETF, the XLB, which is about 26 stocks. So materials overall, I think, look great. You get a series here of higher highs and higher lows with materials. But this particular ETF, you know, it's not quite there. It's almost there, though. Tomorrow, for example, it could reach that. What does the weekly chart look like on this one? The Tengensen is still under the Kijinsen, so it's not technically sound yet for this particular ETF. All right, now let's look at the last three. TE, T1 Energy Inc., technology sector. All right, weekly chart. Last week, we broke through that 200-day moving average. This is the members' request right here. We get a future cloud that's very bullish. Perfect example of what I'm talking about as far as when it's appropriate and when it's right to get in. You don't get in here, ever. You never want to enter a position. I mean, you can manage a position if it gets under the moving averages. Okay, I totally respect that, and you can decide whether you want to continue holding that position. You know, if you feel like there's a general, possibility that it's going to have a quick turnaround, and sometimes it does. But on a weekly chart, I generally don't hold a position when it gets under the cloud. It's very rare for me to hold a position in that scenario unless there's got to be some type of support level that's holding things up for me personally. You know, it's either going to be on the daily chart or the weekly chart. It's got to be something. And in this case, it was a crazy decline here from 2023 through 2024. I mean, this one here basically had dropped, you know, if you measure at these levels, about 87.8%. But now look what's happening with TE. It broke through. It broke through on this candle right here above the cloud. And since then, it's up 176.53%. So it's doing quite well. There's the weekly chart. There's the daily chart. Today was down 8.62%, creating a bearish harami. Bearish harami. That one is, let me go to that pattern here. It's a double candle pattern. It is this one here. Let me circle it for you or square it out. The bearish harami. It's when you have a large green candle followed by a small red candle. Oops, my bad. Let's go back. So there you have a large green candle followed by a small red candle. Okay. And so there's a higher likelihood that this one might pull back at this point. I'm just giving you a heads up. Here's a 4-hour. You can see the pullback on the 4-hour. Here's a 2-hour time frame. It's broken under the Tengensen. A 1-hour. You can see it's stalling at the Kijinsen. A 30-minute where it's breaking down a little bit more. You can go down to a 10-minute where it's starting to break down under the cloud. So every time frame is going to give you more and more information, and then you have to determine, you know, are you comfortable with the lead and the profits that you've made so far? Do you want to hold in while it's declining in this short term? Or, you know, that's my point. So it's kind of extended at this point. You can see how far away price is from the moving averages. And so that's your decision to make. All right, next, we're going to look at SETM, Sprott Energy Transition Materials ETF, looking very bullish here. Okay. Future cloud bullish. Okay. Price above Tengensen Kijinsen on the daily chart. Chico span is above price. ADX is moving up. Weekly chart also looking pretty good. The only thing I'd say is that you're gonna reach some resistance at $30.18, somewhere around that level. It's about 4.8% away, so just keep that in mind. PWR is Quanta Services Inc. And this one on the weekly chart looks very bullish. Obviously, we've got all the elements of Ichimoku telling us that it's okay to be in this trade. The cloud itself is bullish. Tenkan-sen is above Kijun-sen. Chikou-span is above price. Price is above all the moving averages. On the weekly chart, here's the daily chart. All of the same applies here as well. Okay. In fact, there's a higher probability this one's going to move up tomorrow based on the spinning top. So when you see price dropping and then it forms a bullish spinning top like that one right there, it's a higher probability tomorrow that we're going to see this one moving up. Okay, and that's going to do it for this video, folks. Thanks for watching. I appreciate all of you. Don't forget to like, subscribe. It really does help the channel. We are trying to reach 27,000 subscribers. Let me show you guys something. We are at 26,300. If everybody that's watching right now, this moment, hits that subscribe button, it's not going to cost you anything, but you'll be helping the channel so I can keep bringing these videos, right? Hit the notification bell if you want to get these videos a little bit sooner. This is the advantage of subscribing. This is time-sensitive stuff. Technical analysis of stocks, the stuff that I'm putting out is typically on a daily basis, right? So you want to get it earlier so you can like assess the situation and act on it when the time is right. And remember, you can check out the member-only videos that I post. They're usually about an hour long by hitting the join button and becoming a member that way. That's it. Thanks, guys. I will catch you all in the next video.